Well, I think that the mutual fund industry is an industry that has products that have no guarantee. I think that's the first point for all of us to understand. We don't have guaranteed products. Now, wherever there is a guarantee, trust is not required. Wherever there is no guarantee, trust is the most biggest element that is required. So I think anything and everything that you can do to increase trust in yourself, in your interactions with your clients, is probably the most biggest thing to take care of. The second thing I would say is that if I were to just quote that when an industry is young, the distributor is the king. When investors gain awareness, the product becomes the king. And when the products get commoditized, the brand becomes the king. What I mean by this is that in the mutual fund industry today, I think we are in the third phase after 2018 when SEBI categorized mutual funds. It's all like a commodity, which means that the brand, you as the brand, is probably going to be the most important factor that will help you expand and scale your business. If you focus on that aspect of what defines you and your business and your brand, I think you'll find most of the answers there that can help you scale. Well, in terms of positioning yourself to take advantage, I would say that, and I mentioned this before, that every investor that you meet is obviously coming to you because he or she needs returns. If returns is one side of the coin, the other side of the coin is risk. So, positioning yourself as a risk manager first and then an investment manager is probably where you will find all the answers that you need. It is about controlling the controllables. Much of the time we may spend in answering questions or selecting products based on various factors. More than that, when we say controlling the controllables and talking about positioning yourself as a risk manager, it's about writing down your process of risk management and being able to explain it in a simple and relevant way for your customers. So I would say that positioning your business for you to be as a risk manager first and then an investment manager is one approach I would advise. Well, when we're thinking about business areas to focus on, let's first recognize that in India, you will have one of these unique situations where you have four regulators to a single household wallet. So you have the RBI for banks and loans and savings products, SEBI for capital market products, IRDA for insurance products, and PFRDA for pension products. But a household, a husband and wife that's earning, they need all of it. Unfortunately, because of the four regulators, I would say that one of the things that has probably happened is that distribution channels have probably become more siloed and under each regulator, and one dislikes the other or so. But I would think that amongst MFDs, as you look at the most successful models, uh, those successful models are ones that is able to give clients and their client households and access to multi products across regulation. So whether it is helping them with loans, educational loans, house loans, whatever it is, and savings products to investment products to insurance products, both life and health, and also income during pension, for your retiree years. I think those are things which I would say would be one way to look at it. The second thing, one of the things that I've been very passionate about is to try and bring retirement investments as one of the priorities for your investors. Retirement is the only financial goal for which you don't get a loan. Whether you want, education or buying a house or a car or starting a business, you can get a loan for it. You don't get a loan for retirement. So you need to start early. And therefore, I think the aspect of focusing on building retirement folios, because retirement is also the only AUM that does not get redeemed. If you do SIPs for your clients' kids or for various financial goals, when they reach that goal, they redeem it. But when the retirement goal is reached, people want an income out of that AUM. The AUM doesn't necessarily get redeemed. So it's a very structurally profitable AUM that you can build. And that's the second area that I would focus on people to learn more and understand the distribution phase of people's lives rather than just the acquisition phase of their lives.